Welcome to the Deep Dive. Today we're going to explore the world of ride-sharing, specifically looking at the latest TalkTickers research report and what it says about the industry's outlook for 2025 and beyond.
It's a really fascinating report that unpacks a lot, from how driver payments are evolving to the huge tech shift with electric and self-driving vehicles. It really seems like ride-sharing is at a crossroads.
Yeah, it's definitely an industry in flux, and there's a lot to cover, so let's jump right in. The research report dives deep into the evolution of driver pay and highlights some major shifts that are happening, especially with those early experiments with flat-rate payment structures.
You're right, those flat rate models where drivers are paid a fixed hourly rate regardless of how many trips they complete or how efficient their routes are, well, they're running into some pretty big roadblocks.
So it seems kind of counterintuitive, right? You'd think a predictable wage would be attractive to drivers.
Yeah, you would think so. But in practice, it actually ends up disincentivizing drivers from hustling or optimizing their routes. If they earn the same amount, whether they take the shortest route or the scenic route, there's really no motivation to go the extra mile. And this ends up impacting the rider experience too, which ultimately hurts the platform's reputation.
It creates this vicious cycle almost. Unhappy drivers lead to unhappy riders and eventually an unsustainable business model.
Exactly. And to make things even more complicated, companies are having to spend a ton of money to incentivize drivers to stick around under these unsustainable flat rate models. The report found that many platforms are offering massive sign-on bonuses and other perks just to stay competitive.
That's interesting. So flat rate payments seem to be hitting a wall. What about those upfront pricing models where riders see the price before booking? Are those working any better?
Not really. Those models actually shift the risk onto the driver, which can lead to some real frustration. Well, imagine you're a driver and you get stuck in unexpected traffic or have to take a detour because of a road closure. You end up earning less than you anticipated, which creates a real lack of trust between drivers and the platform.
That makes perfect sense. It sounds like the industry is beginning to realize that keeping drivers happy is key to success.
Absolutely. The report emphasizes that driver satisfaction is crucial for the long-term health of the ride-sharing industry. So, now the big question is, how do they keep drivers happy and make the business model profitable? It's a tough nut to crack.
For sure. What's next for driver pay then? What are some of the solutions they're considering?
Well, one solution that's gaining traction is the hybrid payment model. This model combines a base hourly rate with performance-based bonuses, rewarding drivers both for being available and for providing excellent service.
That makes sense. Can you give an example?
Sure. Drivers could earn extra for consistently high rider ratings, completing a certain number of trips during peak hours, or even just maintaining a high acceptance rate for ride requests. It's about creating a balance.
So it's kind of like rewarding them for both showing up and excelling at their job.
Interesting. What other ideas are being explored?
Some platforms are shifting toward a flat commission model, where drivers keep a bigger chunk of each fare, and the company takes a fixed percentage. This provides drivers with more transparency and potentially higher earnings overall.
I can definitely see how that would appeal to drivers. Knowing they're keeping a significant portion of what they earn might encourage them to provide better service too.
You're right. It definitely aligns their incentives with the platform's goals. And there's even some buzz about platforms exploring equity and profit-sharing models, giving long-term drivers a real stake in the company's success.
Wow, that's a huge shift. Imagine drivers becoming like mini investors in the companies they work for. That could really change the entire dynamic between drivers and platforms.
Absolutely. It's a bold move that recognizes the critical role drivers play in the ride-sharing ecosystem. They're more than just gig workers. They're essential partners in the success of these platforms. All right, we've talked about driver pay, but what about all the new tech that's shaking things up? The research report dives into the rise of electric vehicles and the looming presence of autonomous vehicles. What's the situation with electric vehicles? Are we seeing widespread adoption in ride-sharing fleets yet?
Oh, we are definitely seeing a significant increase in electric vehicle adoption. Ride-sharing companies are catching on to the benefits from the lower operating costs for drivers due to reduced fuel and maintenance expenses to the positive environmental impact. It just makes sense.
Especially with those fluctuating gas prices, going electric seems like a smarter choice in the long run. Plus, it aligns with the growing trend of riders wanting eco-friendly options.
You're absolutely right. It's creating a win-win situation for everyone involved. Drivers save money, riders feel good about their choices, and ride-sharing platforms can showcase their commitment to sustainability.
It's a smart move all around. But what about the cost of electric vehicles up front? aren't they still significantly more expensive than traditional gas-powered cars?
They are, yes. That higher initial price tag can be a barrier for some drivers, but the report points to some interesting developments that are addressing this issue.
Oh, really? What are companies doing to make the switch to electric vehicles more feasible for drivers?
Well, some companies are starting to offer financial incentives like subsidized leases or discounts on charging. Others are even going a step further and exploring the idea of owning and managing their own electric vehicle fleets.
That's a pretty big move, going from being primarily a tech platform to operating more like a traditional transportation company.
It would definitely be more complex, but it could also give them a strategic advantage. Imagine a world where every rideshare car is a sleek, new electric vehicle, fully charged and ready to go. It could completely elevate the rider experience.
Yeah, it would definitely be more premium experience.
Yeah.
This also makes me think about the broader impact on cities and infrastructure. More electric vehicles on the road means a greater need for charging stations and might require us to rethink urban planning strategies.
That's a really important point. This shift towards electric vehicles goes way beyond just the ride-sharing industry. It's going to force cities, governments, and energy providers to adapt and innovate as well.
It's definitely a fascinating time to be observing all of this unfold. We can't talk about the future of ride-sharing without mentioning self-driving cars, though. The research report suggests they aren't quite ready for prime time yet, but I'm curious about the major obstacles that are holding them back.
One of the biggest obstacles is the technology itself. It's incredibly complex. We're talking about cars that need to be able to perceive their surroundings, make decisions in split seconds, and interact safely with pedestrians, cyclists, other vehicles, and all sorts of unpredictable obstacles. It requires extremely sophisticated AI and machine learning algorithms that are still being developed and refined.
It's like teaching a computer to not just drive, but to think like a human driver, anticipating and reacting to all the nuances of the road.
Exactly. It's a huge challenge. And then you have all the ethical and societal implications to consider as well. Who's responsible if a self-driving car gets into an accident? How do we ensure that these vehicles operate safely and fairly, especially in busy city environments? These are big questions that society is still trying to figure out.
Yeah, those are some pretty big questions. And then there's the potential impact on jobs and the economy. What happens to all the drivers if self-driving cars become the norm?
That's another huge question. It's something that policymakers, industry leaders, and society as a whole need to be thinking about proactively. We need to consider retraining programs, new job opportunities, and how to manage this transition in a way that benefits everyone.
It seems like there's a lot of uncertainty, but also a lot of potential for positive change.
Absolutely. This is an industry that's constantly changing and evolving. There are going to be winners and losers, disruptions and breakthroughs. And that's what makes it so interesting to follow and analyze.
It definitely makes for a fascinating discussion. But before we move on, let's switch gears for a minute and have a little fun with our This Is Not Financial Advice segment. It's where we put on our speculative trading hats and explore a wild but potentially lucrative trade idea.
I always enjoy this part. Let's hear it.
Okay, so based on everything we've discussed so far, what if we invest in a company that's not building cars or developing self-driving software, but instead focuses on training and certifying the technicians who will be essential for maintaining all these futuristic vehicles?
Interesting. It's like investing in the picks and shovels during a gold rush. Instead of betting on which ride-sharing company will be the most successful, we're betting on the indispensable workforce that will keep those vehicles running smoothly.
Exactly. And with the demand for skilled technicians expected to skyrocket as electric vehicles and self-driving cars become more common, this could be a huge market opportunity.
Okay, I'm listening. Break it down for me.
Imagine a company that provides specialized training programs specifically for electric vehicle and self-driving car maintenance. They could cover everything from advanced diagnostics and battery technology to sensor calibration and all the latest tech.
I like it. It's very practical.
And we could even go a step further and envision this company becoming the industry standard for technician certification. It would become the go-to source for ride-sharing companies looking to hire qualified mechanics.
Now you're talking. With the technician shortage already causing headaches for the industry, we could leverage that to our advantage. Negotiate some favorable long-term contracts with major ride-sharing players, lock in a reliable stream of revenue.
Exactly. We'd essentially corner the market on electric vehicle and self-driving car technicians. We'd be supplying the lifeblood of this rapidly evolving industry.
Hold on, let's not get carried away just yet. Remember, everyone, this is just a hypothetical thought experiment, definitely not financial advice.
Of course, of course. But it is exciting to consider the possibilities, isn't it?
It definitely is. Sometimes these out-of-the-box ideas can spark real innovation. Who knows? Maybe someone listening to this will take this concept and run with it. Maybe they'll create the next big thing.
That would be amazing. And on that note, we'll wrap up part 1 of this deep dive into the world of ride sharing.
Welcome back to the deep dive. When we left off, we were discussing the rise of EVs and AVs.
Yeah, that's right. We were just getting into the complexities of this tech revolution that's reshaping the ride-sharing world. So where do we go from here?
Well, let's unpack the challenges and opportunities of electric vehicles first. Like we mentioned, they offer a lot of advantages: lower operating costs, a reduced carbon footprint, and a quieter and smoother ride for passengers.
Yeah, those are all great things, but what are some of the barriers that are preventing wider EV adoption in ride-sharing?
Well, besides the higher upfront costs, which we already touched on, one of the biggest hurdles is the charging infrastructure. We need a strong network of charging stations in place to support a large-scale transition to electric vehicles.
That makes sense. If drivers are constantly worried about finding a place to plug in, it's definitely going to discourage them from making the switch.
Precisely. And it's not just about the quantity of charging stations, but also their accessibility and charging speed. Drivers need to be able to charge up quickly and conveniently in order to minimize any downtime.
So it sounds like significant investment in charging infrastructure is going to be crucial to really unlock the potential of EVs in the ride-sharing space.
Absolutely. And the research report actually highlights that some cities are already taking the lead on this, investing in public charging stations, offering incentives for businesses to install chargers, and even exploring some pretty futuristic technologies like wireless charging.
Wait, wireless charging for EVs? That sounds straight out of the sci-fi movie.
I know, right? It's still in the early stages of development, but the idea is to create charging pads that are embedded right into the road surface, allowing cars to charge while they're driving or parked. It could be a total game changer for ride sharing, eliminating the need for drivers to make separate charging stops altogether.
That would be amazing. It would streamline things so much. So are there any other EV-related challenges we should be thinking about?
Well, battery technology is another area that's constantly evolving. We need batteries that can hold more charge, charge faster, and have a longer lifespan. And of course, we can't forget about the environmental impact of battery production and disposal. Those are issues that still need to be addressed.
It seems like there are a lot of moving pieces when it comes to EVs. But overall, would you say the benefits outweigh the challenges?
I would say so, yes. And the research report seems to agree. It indicates that the momentum behind electric vehicles is only going to keep growing. We can expect to see more and more of them on the road in the coming years, which will definitely have a significant impact on ride sharing.
Okay, so let's switch gears now and talk about the other big technological disruptor that's looming on the horizon: autonomous vehicles. We touched on the complexities of the technology earlier, but I want to delve a little deeper into its potential impact on the ride-sharing landscape.
Okay, sure. Well, one of the most immediate impacts is the potential for increased efficiency and lower costs. Think about it. No human drivers means no need to pay wages, deal with scheduling issues, or worry about managing driver behavior.
And no more surge pricing either.
Exactly. Autonomous vehicles could operate around the clock, providing ride-sharing services without needing any human intervention. That could significantly reduce the cost of rides, making them more accessible to a wider range of people.
It's like having transportation on demand available anywhere, anytime. It could revolutionize how we get around, especially in cities.
It really could. And it could also have a major impact on safety. Machines, unlike humans, don't get tired, distracted, or impaired, so AVs could potentially eliminate human error, which is a major factor in most traffic accidents.
That's a huge plus. But even with all those potential benefits, there's still some pretty big questions hanging over autonomous vehicles, right? Like, when will they actually be ready for widespread use?
That's the million-dollar question. And unfortunately, there's no easy answer. Some industry experts predict that we'll see fully autonomous vehicles on the roads within the next decade, while others believe it's still much further out.
So what are the key factors that are going to determine how quickly this technology is adopted?
Well, technological advancements are certainly a major factor. We still need to refine the algorithms, enhance the sensor capabilities, and ensure these vehicles can handle all sorts of complex driving scenarios. But there are also regulatory hurdles to overcome.
Yeah, right. Governments around the world are still trying to figure out how to regulate self-driving cars, how to establish safety standards, and how to deal with issues like liability in case of accidents. It's really uncharted territory.
Exactly. And public perception is another important factor. People need to feel safe and comfortable riding in a vehicle without a human behind the wheel. Building that trust is going to take time and education.
It really makes you wonder what the ride-sharing landscape will look like in 5, 10, or even 20 years. Will there still be human drivers? Or will we see a mix of both autonomous and human-driven vehicles on the road?
It's hard to say for sure, but one thing's certain. The industry is undergoing a period of rapid change and transformation. The companies that can adapt, innovate, and successfully navigate these complexities are the ones that will ultimately shape the future of mobility.
And speaking of adapting and innovating, remember that this is not financial advice segment, where we were brainstorming about investing in a company that trains EV and AV technicians.
Oh, yeah, I remember that.
Well, it got me thinking, what if we took that idea even further? What if instead of just training technicians, we created a company that actually specializes in building and managing entire fleets of autonomous vehicles, specifically for ride-sharing companies?
Now, that's an interesting idea. It would be like a one-stop shop for all their autonomous vehicle needs.
Exactly. We could call it like Autofleet, the ultimate solution for seamless autonomous ride-sharing.
I love it. And we could provide everything from the vehicles themselves to the maintenance, software updates, and even the remote monitoring and support.
Right. And it would free up those ride-sharing companies to focus on what they do best, which is connecting riders and vehicles.
And think about the scalability of that model. We could start with a small fleet in one city and then rapidly expand to other markets as the demand grows.
It would be like the Amazon of autonomous ride-sharing.
Okay. Okay, now you're getting a little carried away. But I have to admit, it is a pretty compelling idea.
Of course, this is all just hypothetical and definitely not financial advice, as always.
Absolutely. But it does demonstrate the kind of creative, out-of-the-box thinking that's going to be essential to thrive in this rapidly evolving industry.
Well said. And to all our listeners out there, all the entrepreneurs and investors, if you're looking for the next big thing, keep your eyes on the road. The future of transportation is about to take a very interesting turn. Welcome back to the Deep Dive. So we're talking about the future of ride sharing, and we've uncovered some really interesting insights from the Talk Tickers research report about driver payments, the rise of EVs, and the potential impact of those EVs.
Yeah, no doubt about it. This industry is on the verge of some huge transformations.
It really does make you wonder what the ride-sharing world is going to look like in 5, 10 years even. Will we all be cruising around in self-driving cars? Will anyone even own a car anymore?
Well, those are some big questions, and it's tough to predict the future with any kind of certainty, but I think one thing is clear. The way we get around, it's going to be completely different in the coming decades.
I know, it's exciting and a little bit, I don't know, maybe even a little scary at the same time.
Definitely. There are a lot of unknowns, but that's what makes this such a dynamic and just a really fascinating space to watch.
Absolutely. So before we wrap up this deep dive, let's take a step back and kind of summarize the key takeaways from the Talk Tickers research report.
Sure, that's a good idea. So the first thing that really jumps out is that the traditional ride-sharing model, with its reliance on flat-rate driver payments, just isn't going to work in the long run.
Right. We talked about how that model disincentivizes drivers from prioritizing efficiency and providing excellent service. It just doesn't create the right incentives.
Exactly. And it leads to unhappy drivers, high turnover rates, and not so great experience for riders.
The report really emphasized the need for a fairer and more sustainable system, one that benefits both drivers and the platforms themselves.
That's right. And that's where those alternative payment models come in, things like hybrid structures and commission-based systems. It will be interesting to see which approaches really take off in the market and become the standard.
For sure. Another key takeaway is the rise of electric vehicles and ride-sharing fleets. It seems like that's inevitable at this point.
Definitely. EVs have a lot going for them. Lower operating costs, environmental friendliness, and just a more pleasant riding experience overall.
But we also talked about some of the obstacles that are slowing down their adoption. Things like the need for more charging stations and continued improvements in battery technology.
Yeah, those are definitely hurdles the industry needs to address if it wants to fully unlock the potential of electric vehicles.
Right. And then there's the elephant in the room, the self-driving cars, the AVs.
Yeah, the AVs, we can't forget about them.
Even though they're still in the early stages of development, they have the potential to completely revolutionize ride sharing as we know it.
For sure. I mean, imagine a world where you can just summon a self-driving car whenever you want. No need to worry about surge pricing or whether a driver is available.
It would make transportation so much easier and probably more affordable too.
Right. But we also have to be realistic about the challenges that still need to be addressed before AVs become mainstream.
Like we talked about before, the technology needs to continue to improve, regulations need to catch up, safety concerns need to be addressed, and people need to get comfortable with the idea of riding in a car that drives itself.
Yeah, and then there's the whole question of what happens to all the drivers if self-driving cars take over. It's a big question with no easy answers.
It's definitely a complex and ever-changing landscape, this whole world of ride sharing, but it's also full of possibilities, so who knows what the future holds.
Absolutely. It's an exciting time to be watching this industry unfold. And as with any emerging market, there are both risks and rewards.
That's why it's so important to stay informed and do your research. You need to understand the dynamics of this industry before making any decisions.
Exactly. For investors, this could be a huge opportunity to be a part of something truly revolutionary.
But always remember, everyone, this is not financial advice.
Do your own research, consult with a financial professional, and make informed decisions.
Well, that's all the time we have for today. Thanks for joining us on this deep dive into the future of ride sharing. We hope you found it insightful and maybe even got you thinking about the possibilities ahead.
And if you enjoyed the episode, be sure to subscribe to the deep dive and share it with your friends.
And don't forget to let us know what you think. Head over to our website or social media and share your thoughts on the future of ride sharing. We'd love to hear from you.
Until next time, stay curious.